Welcome to 2 Minutes Learning, an educational channel for learning concepts in just 2 minutes in most easiest way.
What is cash flow statement? Cash flow statement shows how cash flows in and out of a business over a specific period. It's divided into three main sections: cash from operating activities, cash from investing activities, and cash from financing activities. First, cash from operating activities. This shows how cash generated or used in the core business operations, like cash received from customers and cash paid for supplies, salaries, operating expenses, etc. Next, cash from investing activities. This shows how cash spent on or generated from investments in assets like property, equipment, or securities, overall capital expenditure. Finally, cash from financing activities. This shows cash flows related to raising capital, funding the business, such as loans, repayments, and dividends. Here is an example. For an e-commerce company, here's a cash flow statement. Net cash from operating activities, $500 million. Net cash from investing activities, minus $100 million. Net cash from financing activities, $150 million. So, the net increase in cash is $550 million, which is total of three cash flows. If this figure comes negative, then it's decrease in net cash. Let's discuss one more example of one of the world's biggest coffee company. In FY23, the company has reported in 10K net cash from operating activities $6 billion. Net cash from investing activities minus $2.2 billion. Net cash from financing activities minus $2.9 billion. So, the net increase in cash was $733 million.
Thanks for watching our channel 2 Minutes Learning. To learn more of such interesting concepts, subscribe, like, comment and share with your friends. Press the bell icon to get the alerts for new concepts.